Hi everyone, this is Matt with the Fundamental Investing Institute. Thank you for tuning in today. We're going to stay on the topic of SMB acquisitions for a little while, and what I wanted to do today is to elaborate on two of the terms, two of the basic terms, and we'll continue to do this in subsequent videos. So in a previous video we introduced these SMB acquisitions, and we kind of went over the typical economics of a successful deal and talked about over the last several years how these SMB acquisitions are gaining a lot of attention. There's influencers talking about this and a lot of books being written, podcasts, etc. And the economics are just very favorable if you can have a successful deal. The monetary gain can more than compensate for the risk involved. So that's really the reason why it's gaining so much attention. But the two terms I wanted to focus on today, one is SMB, which stands for Small to Medium-Sized Business, and the other is ETA, and ETA stands for Entrepreneurship through Acquisition. And I briefly defined these in a previous video, but I wanted to elaborate on them. Now, ETA, Entrepreneurship through Acquisition, is a really important term because I think we need to emphasize the term entrepreneurship. These smaller business acquisitions, these are operating entities that need good, solid leadership in order to be successful. All right, they're not passive investments. You're not buying a stock. You're not buying a bond. You're not buying a Class A piece of real estate with management in place. Generally, these businesses need someone to come in and run them. There might be management in place, but even then, the management has to be, overseen by the owners. So there is operating involvement. So I think the term entrepreneurship through acquisition is a very appropriate term, especially if we put a lot of emphasis on the term entrepreneurship and maybe a little less so on the term acquisition. The second term is just SMB in general. So small to medium-sized businesses, to quantify that is a little difficult because it's really subjective. Different people in the SMB acquisition world have different definitions. So some brokers and lenders and others will define a small to medium-sized business based on revenue. The way I like to define it is on deal size, and I like to define it as those deals which can be financed with a small business loan from the SBA, the Small Business Administration. And the loan programs that would generally back these are called 7A loans, and these loans go up to $5 million. So we talk about valuation and deal size of $5 million and under. That's kind of how we define SMB. Larger acquisitions usually require different, more sophisticated levels of financing. But a $5 million deal size can buy a pretty significant business. It can buy a business with 7 figures in operating earnings. So we'll talk more about the terminology, but today's video I just wanted to kind of elaborate on those two terms, and we'll continue to crank these videos out. For a while, we're going to stay on SMB acquisitions and talk more and more about those kind of deals. So thank you for tuning in. We look forward to seeing you next time.